All right, what is up, traders? What's up, tycoons? Super excited for today's video. In today's video, we're going to go over natural gas. We're going to take a look at the spot price, the futures. All right, we're also going to take a look at BOIL, KOLD, UNG. We're going to break all of them down in today's video. Been doing very, very well here recently trading BOIL. All right, super excited ever since the BOIL split. I'm an options trader, and so the option premium has been really, really juicy. And we're going to break down my views on, where natural gas is. As always, the content provided on this channel is for informational and educational purposes and is not intended to be relied upon as legal financial advice. All right, so please be sure to read through the full disclaimer. All right, and we'll go ahead and hop out of here and head on over into our charts for today. So I'm going to start off here on the spot price for natural gas. And the reason we're going to start off here is because there's a few strategies that we go over in this video that I just want to break down to people, right? And those are going to be divergences using the RSI. So this is your relative strength index and also the MACD. All right. I like to keep things pretty basic on the YouTube channel. And so these are some basic tools and indicators that you guys can use. Now, it's been a while since I posted a video. My son was actually just born over the weekend. So, I'm behind on a lot of videos, got a lot of catching up to do, but, family first. So, let's dive into it, right? So when we see here, now remember, this is the spot price, okay? When you see it making these higher highs, but you look at your relative strength index, okay, and you see it making these lower highs, this is what's known as a bearish divergence. And if you take a look here at your MACD, we see the red line crosses below this yellow line here, right? And that's what's typically known as an exit signal. And then shortly after, we see the price go down. Over here, we see the exact opposite where we're creating lower lows, and then we see a low and a higher low right here, right, on the RSI. So we're building relative strength as price is dropping, bullish divergence. Then we get a MACD crossover to the upside, right? And we see a strong upside push. And this has happened many times, okay, and been a really good indicator for the spot price of natural gas. Now, before we go too far, all right, I do want to actually show you guys something from a long-term perspective. The whole reason I even really started making natural gas videos is we'll go here to this time frame basically, right? And we'll remove all these drawings real quick, and we're going to put one simple price level right here, okay, at $2. All right, now why am I doing that? Because this is the reason that I got interested in natural gas. Okay, if you take a look, now this is a monthly time frame. Look at the amount of time that we spend under $2 on the spot price of natural gas, right? It's very, very short-lived. And you can see that we actually came right around that price level here. Okay. And we've already started a rebound. So once we came down to these levels, it was very attractive to me. And I knew that, hey, it's going to be a very bumpy, rocky road. But I know that typically, based on history, the spot price of natural gas doesn't stay at this $2 or sub $2 price level very long. Sometimes it's as short as a month. Sometimes it's as long as, 6 months to almost a year. So that's kind of the whole mindset why I even started making these natural gas videos. And I didn't really know that they would be so popular on YouTube. So just wanted to break that down real quick. Now let's take a look at the natural gas futures real quick. All right, and kind of give you guys a big picture time frame here while we're on our monthly chart. Okay, so we're gonna dive into here, and so there's some key levels right here. Okay, so we have our key demand zone, we have our key supply zone right here. Let me take this drawing off of here so you guys can see a little bit better. And so the supply zones, this is where we're currently battling right now. Okay, is our supply zone right here. This is right around 222 up to about 265, okay, roughly is that supply zone. And once we zoom in on the smaller time frames, you can see that, there's been strong sellers, right? Strong supply coming in each time we've come into this zone, and it can continue to push price lower. But what I really like is the strong reaction to our demand zone here, right? You can see over here, here as well, and even back here, these are strong areas of demand where buyers have stepped in each time and pushed price up higher, push price up higher, push price up higher continually. And we're still seeing that, right? Each time we come down into this demand zone. So, right now we're in a little bit of some cautious territory, right? We have this supply zone that we're entering in, and we really haven't been able to break out past here up to the next overhead target supply zone. But remember, this is a monthly chart, so these are much more macro supply and demand zones. You're not going to interchange between these zones, within a day or within a week, oftentimes. Now, if we go down here to our 4-hour chart, all right, and actually let me put that head and shoulders back on here real quick, right? And just want to show you guys some of the different patterns and things that I look at when it comes to the natural gas futures. If you take a look, we did have this rising wedge that we had over here. Okay. And I showed that in the last video along with the inverse head and shoulders, right? So initially we had a head and shoulders right over here. Okay. forming on the futures. All right, we broke that. We had a strong push down, but we actually formed a nice inverse head and shoulders here with the left shoulder here, head, right shoulder. We broke through our neckline right here, and you can see that that move played out very nicely. And if you guys were watching the channel, I showed that to you guys when it was setting up here, and that was a really good trade opportunity. Now, this purple line is a very important line, okay? This is actually our year-to-date anchored VWAP right here. And so that's exactly where we came down to today is our year-to-date anchored VWAP. So, it's going to be really interesting to see for me, is this a point where buyers start to step in? Okay. Oftentimes market makers and large hedge funds, institutions, they use the anchored VWAP as a buying point or a selling point, right? You guys can see over here, last time we came down to this level, we actually had a strong push up, okay, back on the futures, right? And so we're here testing this level again. Are we going to get a little bit of a double bottom bounce in natural gas, or are we perhaps going to break through our anchored VWAP here? And if that does happen, you're going to see things like UNG and BOIL start to fall, right? We started the breakdown of the rising wedge. So, we may continue that breakdown. That's definitely a possibility you guys just want to be aware of in a scenario that you want to keep in mind. Remember, things like BOIL, UNG, and KOLD, they go off of the futures, okay? Not only are we right here at our purple year-to-date anchored VWAP, but we're also below the weekly and the monthly anchored VWAP. So this does give a little bit short-term basically sentiment to the bears. All right. And the bears are in control on the short term. We're going to see if some of the longer term bulls will step in here and really try to bring up the price of natural gas. Right now, let's go to our daily time frame here. All right, and let's take a look at KOLD real quick. All right, the reason I want to look at KOLD is because to me it seems like this is forming a bear flag, right? So, if you're trying to trade natural gas, okay, you need to be really trying to trade all of these things and paying attention to all of these. Whether you only trade KOLD, whether you only trade BOIL or the futures or anything, it's good to have a good idea. So, right now, if you can see our trend line here, we're very close to breaking out on KOLD. Okay, so if we do get the breakout, that would signify things like BOIL and UNG going down. But to me, this looks like a larger bear flag, right? So here's our flag pole, and then here's the flag itself. And if we break this lower trend line here, we could see a pretty sharp move down in KOLD, which would result in things like BOIL and UNG going up. So if the buyers step in on that year-to-date anchored VWAP, all right, on the futures that we're looking at, and we will see KOLD start to go down. And really 66.48 is going to be the big resistance level I'm watching here on KOLD. Above there, we have 72.60, right? And then below there, we have $60 is going to be a big support level. If we can get below this $60 price level, then that's when I think that we really could see this bear flag here play out on KOLD, right? So I actually am short on KOLD right now. Again, this video is not financial advice, but from a risk to reward standpoint, we're basically entering in at the top of the trend line here on the bear flag. And so we're going to see, if we can get the breakdown and the bear flag to play out. If not, we'll cut our losses shortly up here on the breakout and take those losses and accept them. Nobody's going to be perfect. I've been doing really good on BOIL and KOLD here lately. I got 60% on the last trade, 40% on the last trade, and that's within 1 week, 2 separate trades. These things are really volatile, and if you trade options, which I do, and I really like volatility, then these are going to be the things that you want to trade. But with that volatility, comes nice gains, and it also comes nice big losses, right? So you have to have some type of a strategy in plan. If we take a look at our MACD right here, we're starting to see a crossover, right? We're starting to see the MACD signal curl up here. And so if this thing doesn't curl back down and really start to flatline, this could lead to further bullishness in KOLD, and we could see natural gas start to drop even more. So, we're really at a turning point here soon. And, I think within the next week, by next week, we're going to see, is natural gas going up or is KOLD going up and natural gas is going down, right? So, that's KOLD right there. That's what I'm looking at on KOLD. If you look at BOIL, BOIL is pretty much following the analysis to a T. All right, we have to zoom in here pretty hard on BOIL because this thing's just been dropping so much. But here's our initial cup and handle, guys. This is the cup and handle that we were tracking here. And I drew this a little bit before all of this formation was here. So we'll go ahead and take this out. But these are the exact levels that I gave in the last video where I was looking to potentially go long again on BOIL, right? right around 57.23. That's our 61.8% retracement level. Now, the reason I went short on cold is because the premium is higher. So if your move is right, you're going to make more money short and cold right now off of boil. Really, I just trade boil or cold at the moment, and whichever one is more expensive, right? It has a higher dollar cost, then that's the one that I'm going to trade via puts or calls, right? So what we see here is, from my perspective, again, really nice risk to reward ratio. If we break below 57.23 and flip that to resistance, we can cut the losses, take the quick losses. And if this is right, and this does turn into a nice cup and handle, right? Let's go ahead and take our brush out here. And you see, we have our cup right here. Okay. Now here's our handle. All right. And if this turns into a cup and handle, some of the price levels that we could see on boil in the short term is going to be up to about $89, guys. So really significant move there. All right, from where we're at right here today, all the way up to the bullish price target there is about a 50% move. Okay. And again, from that risk to reward standpoint, right? If we're looking and maybe, you'd risk about 10% on boil here to potentially make 50%. That's a 1-to-5 ratio. And again, not financial advice, just kind of talking you guys what I'm doing, not telling you guys to do it. But if you've been keeping up with the channel, this is the exact structure, right? We had the 1, 2, 3, 4, 5 up, and I was expecting an ABC down here to these same exact levels, to exactly 57.23. We came down there today. So I'm gonna go ahead and take this opportunity, and we're just gonna have to trust the analysis. Okay, and that's what you get with years of experience. Is you take the emotion out of it, right? You just trust the analysis and you set your stop losses and you take the loss or you take the win, right? We have a very defined risk to reward ratio here, and we're going to see what happens. All right, now that we've gotten our ABC correction to the downside, we're basically going to be looking for a new bullish 5-wave structure to the upside here on boil. All right, remember, a lot of this pertains to the futures. All right, we're right there at that year-to-date anchored VWAP for the futures. So bulls need to step in. We need to reclaim and stay above that year-to-date anchored VWAP on the natural gas futures. If we can do that, then potentially we could see, right? But if we lose that year-to-date anchored VWAP, that's when you're going to see things like boil start to really break down and potentially even retest some of our previous lows here right around the $48 price level, potentially even lower. Right, if we zoom out a little bit and just take a look at all of the different trade opportunities, just by going off of that bullish divergence, right, we can see here that, what do we get? We get a low right here. We come down, we make this lower low. And then what do? We have a low here. We have a higher low here on the RSI. And that was a really nice trading opportunity there. Okay. If you're a perfect trader, that would have been a 25% move. Nobody here is a perfect trader. And so, maybe if you can capture 5, 10, 15% of that on a trade, then that's a really good trade, right? And you have to pat yourself on the back, and then you can set your stop loss once you're in profit, set a trailing stop loss, whatever you guys like to use. And that really presents multiple opportunities, right? Then what do? We end up coming back down again, making a new lower low. You see on your RSI here, we're actually making a new higher low here. And that again presents you guys with a really good opportunity. If you take a look, that was actually a 50% move to the upside there. All right. And then, you see we end up pulling back, and what do? Yet again, right? We end up coming in here and we make a new lower low, and we're still making higher lows on the RSI. So you see how we're building and increasing in relative strength as the price action is going lower. That's that bullish divergence. And we've really seen it start to play out here. Another massive move to the upside there on boil. And then we got the pullback that we were expecting. Now, the big thing is this going to turn into, from an ABC correction right here to the downside, is this going to potentially turn into a bearish 5-wave structure, right? A 1, 2, 3, 4, 5 down below. That's something that you need to be cautious of and need to be prepared of, right? Initially the first time I went long right here, okay? Then we came up and it looked, we ended up gapping up. There were some gaps here on the boil chart, right? If we zoom down to the 1 hour real quick, okay, you can see the gaps a little bit more. And, we had a gap down to fill. So I ended up going short on boil. All right, I was short on the boil puts. All right, I had the $60 puts. Right up here when we were in these price levels, right? So if we take a look, we're up here. All right. Didn't look great to me. We ended up forming an island top reversal. Island top is when you gap up. okay, and then you gap down right after that. So this is an island top reversal right here. And you see we had the initial gap down to fill from this candlestick to this candlestick. We ended up filling that. So that was a nice little trade there. That was a nice 50, or it was either 40 or 50% on that trade. And now we're back testing those key levels, right? And if we take a look here at our RSI on the 1 hour chart, okay, what do we actually see here, guys? All right, we see we have a low, we see we have a lower low, and then we see we have a lower low again. And here on the RSI, if you take a look, we have lows and we have a series of higher lows here, right? So on the 1 hour chart, there is a short bullish divergence right here. We have this nice gap up to fill on Boyle. All right, so we're gonna see, can potentially we do that? That'll be something pretty interesting to see develop in the short term. Remember, that key level is going to be right around there at $58, right? Or 57.23 is really our key level there. If we can hold above there and really break out past our most recent highs here of about $77, that's potentially when we could see $89, but we need to be cautious of our previous high as well right here, right? So notice how we're still making a high here and then a lower high here. So we're still technically in a downtrend, right? Now, if you look short term, we are in a little bit of an uptrend, right? We've made a high or a low here, higher low here, higher low here. So we're going to see, can we continue this shorter term uptrend and start to create some higher highs? And really essentially just kind of break out past this negative trend line right here. If we can do that, then we might see this cup and handle play out and take us up to our bullish price targets up here. Let's go ahead and take a look at UNG real quick. All right. And see what's going on over there. All right. Same thing with UNG. If you look at the different signals, right, with the bullish divergence, I have those marked here with these little circles. Really good trading opportunities each time. 40% trading opportunity here when we're creating these higher lows, but lower lows on the price action. 16% opportunity, 26% opportunity, 33% opportunity, and these are all on the daily time frame, right? Now, this chart does look a little bit different, right? There's less decay associated with UNG. So, maybe if you're less risk adverse, this is something pretty important that you want to maybe will be a better suited for you. All right. But if we take a look, we're essentially trying to break down past this support level here. Okay. Now, is this going to turn into a triple bottom, right? Really a quad bottom, but you can call it a triple bottom here, here, and here. Okay. But remember, the more times you test the level, the weaker it gets, right? So we could end up breaking through here. All right. My support levels here for UNG are 667, 642, and 606. Those are going to be the key levels if UNG continues to break down. These are going to be some of the areas of interest. Again, here too, as well, when we looked at KOLD, we saw that the KOLD RSI was starting to curl up, or MACD, I'm sorry. And so here, what we see on UNG is we see the red line crossing down below. Typically, this is a sell signal, all right? But take a look what happened over here. You see we curled down below, and then we actually curled right back up above. Right. So, we're going to look for confirmation here to see, is this thing going to really curl down below, get below that zero line on the MACD, or potentially could this thing start to curl back up? If we do continue to drop and try to test these 2 or 3 support levels here, one thing you want to keep in mind is that we've been bouncing really good off of the bullish divergence trend line, right? We have the low, the higher low, the higher lows, the higher lows, the higher lows, and we're coming down to approach it again. Are we perhaps going to bounce off of this again? But look at how many times we've tested it, right? So, the more times you test a trend line or a level, the weaker it gets. And so you need to be cautious of this bullish divergence really breaking down and, breaking through that bullish divergence trend line. If that happens, then I think there's a very strong chance UNG could come down and retest the lows around $6, maybe even potentially get break down below. So, those are some of the warning signs, okay, that you guys need to be aware of, need to be prepared of, and keep in mind, especially if you're trying to play things like Boyle and KOLD, right? These things are highly leveraged. There's a reason they call them the Widowmaker. Make sure you're using risk management. I've got some really good videos dedicated entirely to the myths and facts, all right, surrounding the decay with UNG and Boyle. All right, I've got lots of good trading strategy videos. You guys can just look those up, Exactly Trades, and type in, the corresponding info. It'll pull right up. And also feel free to email me at any time, guys. Okay, if you guys want to email me for, a one-on-one coaching session or a one-on-one personal session, we can always do that. I talked to a lot of people about UNG and Boyle. A lot of the coaching clients are actually related to natural gas, and they're just looking for, some different strategies, or things that, that they can do, to really help them, maybe fight the decay. We can go over some different option strategies, some different hedging strategies, and different things like that. Okay, so again, appreciate you guys watching the video. Smash that like button, subscribe to the channel for more. All right, and feel free to shoot me an email, zachleytrades@gmail.com.